Hey, welcome to another episode of the Technical Analysis Daily Stock Series. This is Eric, your host. Today I'm going to look at Twitter. It's October 31st, 2019, but I'm going to post this video in a couple of days. This stock has really gotten beaten up lately, and let's take a look at it because you'll see that there's this massive gap down that happened last week on, they missed their earnings. We've seen these gaps happen before. There was a period here back in July of 2018, slight gap in October, late October of 2018, another gap here in, what would that be, April of 19. A lot of these gaps are due to earnings. It's earnings season, and Twitter analysts either love them or hate them based on their performance versus expectations. So that's going to make a lot of this video, a lot of the technical analysis, much less relevant, but I wanted to at least take a look at it anyway and provide a little insight, or at least throw my 2 cents on the table. So like I said, here is the moving average for the 1-year chart, and as you can see, no shocker here, the 10-year is below the 20, below the 50, so that is a bearish indicator. But when you have a drop like this, where it sort of free fell from about $39 a share down to $32 a share, that's going to happen. When a $40 stock loses $7 in one day, you're going to get this sort of look. So here's a look at the 5-year chart data. And you see the 5-year, because the 5-year looks at weekly data, not days, you don't have these gaps, but you do have these long bars in a single week, and that's exactly what that's all about. Those are just massive stock drops in 1 week, typically happening in one day. And here, of course, is the moving average. And what's interesting is that prior to last week, this moving average was certainly bullish, and then it just took a few weeks rather. So I guess this was actually last month. A few weeks for this stock to just drop, and the 10 is now approaching the 20, and probably going to head lower, so that this looks like it's in a downward move as well. Fibonacci analysis, I wanted to take a look at it. I was going to say it's less relevant, and it is less relevant, but I wanted to take a look at this anyway because we had this move from late December of 2018 all the way to the high that we had in September of 2019, and it's been coming off since then. So I wanted to see what that move was relative to the last upward move, this move down, relative to the last up move. As you can see, we have already crossed the 78.6% level. I'm not sure that we're going to go down to $26. I'll talk about some important levels to keep an eye on here shortly in this video, but this stock's taking a beating, and this is just straight up earnings. It's not technical at all. So the MACD as well, less relevant, no surprise here. There's a lot of bearish momentum in the market, and so the MACD is meant to measure bullish and bearish momentum in the market. And when you have a gap down like that, everything, the sky is falling for this stock right now. And this is what I wanted to point out, is that at this $28 level, we're seeing some past support. So we saw support at this level in April of 2018. We saw it again in mid-October 2018. We saw it in December of 18. And it wouldn't surprise me if we fall another $1 and retest this support in 2019. So overall, this stock has had a huge gap down. It was purely on earnings. They missed their earnings report, or missed the expectations rather. But they still had $875 million of revenue. So moving averages are less relevant, as are the Fibonacci and the MACD. Like, when you have a gap down like that based on a fundamental issue, and earnings reports are certainly a fundamental matter, it's going to make your technical analysis a lot less relevant. But what is relevant, the most relevant thing here is the fact that there was support at that $28 level. And I'm seeing some articles in the marketplace. One of the blogs, Zero Hedge, I think it was Zero Hedge, mentioned that it might be worth buying the dip. And so when you consider the fact that in the past, well, in general, when you see markets gap up or down, most technicians, most technical analysis people expect the market to fill in that gap at some point. So, I do see us going down, possibly testing this $28 support level. But ultimately, I am a believer that this stock is going to pop again. So some of the Zero Hedge article mentioned buying the dip, and I'd have to certainly agree with them on this. I would look to buy the dip and just see if it goes on higher. And there are a number of ways to buy the dip. I much prefer allocating capital to trending markets. When a market does this, and it's more of a bet on where it's going to go in the future, but there's less solid ground to stand on aside from what we think will happen in the past. Well, in that scenario, I definitely would look to play the options. So you could certainly look to buy some call options, maybe December call options. I'm sure they're pretty cheap right now because the stock is so beaten up. I would also consider owning. Actually, I would not own a put spread, because if you were to buy a put spread and this market went ahead and bounced off of the 28 level, you have a good possibility of not really seeing profit in that trade. So if I were going to take a shot, it would definitely be buying call options, not actually buying the stock, but buying call options. I like buying call options when the market's going down, because that's when they're cheap. The premium should be low because everyone's rushing for the puts. So buying puts right now, put spreads, that's going to be really expensive. And you might even be able to get in a scenario where you can create a strategy where you collect some money while still owning the upside. So there are a lot of fun option strategies, and you can hear more about those. I need to create a video that introduces myself. That's coming. But I do have an option trading podcast called The Weekly Option, and it's we talk about all sorts of stuff like this. So that's it for Twitter Stock. Hope you guys enjoy these videos. Thanks for listening. Please feel free to share them. Happy trading.